All right, good evening. It's a Friday night bonus conversation for you today. We've already done one update. We've done our news bulletin. This is a weekend bonus conversation with someone I've been meaning to sort of pin down for a conversation for a while now. My guest this evening is Pavan Lall. Pavan is a brilliant journalist. He's written for Fortune India, for the Telegraph, for the Dallas Business Journal, I beg your pardon. He's the winner of the Citi Journalistic Excellence Award 2016. But he's also written two brilliant books. And I just finished reading one of them, and I just felt that this is a voice that I must bring to you as well as viewers on this channel. So Pavan's written two books, the latest of which is called Yes Man. I have it right here, in fact. There it is. The Untold Story of Rana Kapoor. And this is the Yes Bank, what happened with Yes Bank. And before this, he wrote a book that was very, very interestingly titled called Flawed, The Rise and Fall of India's Diamond Mogul, Nirav Modi. The interesting thing about both of these books is that they're effectively about banking fraud. And I find banking fraud really fascinating. So I felt like this is a conversation we must have. And he agreed to give us some time. And he's also agreed to take some questions. So we're going to talk about banking fraud. I know I look really interested, about a subject that most people are not interested in, but I'm fascinated by this, about what's going on in our banking system and how it sort of relates to you and me. Because the truth about our banking system is that there are two kinds of loans, right? There are loans that are given to businesses, the sort of working capital loans where they take the money in order to manufacture something, they sell that this thing and pay the money back. That's a working capital loan. But there's also sort of fixed capital loans where they're borrowing to buy land and to buy machinery and to buy fixed assets. And that's the problem. But all of this is also riding on your home loan and my home loan and the retail loans that we take. But if you miss a single EMI, you get a really unpleasant phone call from the bank. So how is it that on one hand, you're not allowed to miss an EMI at all, but on the other hand, the latest number says the top 100 willful defaulters in the Indian banking system, the banking system has written off 62,000 crore rupees worth of loans from these people. And willful defaulters are people who have the money but choose not to pay. How is this possible? How is this system actually stacked up? And what's actually going wrong? These are the questions I'm going to ask Pavan right now, who's joined us. Pavan, good evening. Thank you for joining us. Thank you for giving us time. I first want to know, though, why did you choose to write about banking fraud? They're both brilliant, interesting books, but what sort of got your interest?
Good evening, Faye. Let me thank you for bringing me on this evening. It's an honor to be here, and I'm happy to do this. I really wasn't looking at banking fraud initially, but I was looking at how the system was gamed. And I think what got me started onto this was essentially the story of Nirav Modi, who's the diamantaire and the jewelry industrialist who essentially is in jail right now and was busted a couple of years ago when he was gaming the system with Punjab National Bank. And it was discovered that he was taking huge amounts of fraudulent loans for over a decade, right? And I think that in many senses actually blew the lid off how deep some of these shenanigans are running within our financial system, even well before ILNFS and all the other systemic problems that have been coming to late with banks that included ICICI and PMC, and of course, more lately, Yes Bank. So the actual route to Yes Bank and the book that you mentioned earlier started with Nirav Modi and the whole blow up with Punjab National Bank before coming to Yes Bank, which is where we are right now.
So, and right now we've had such a series of these sort of big name, what we're calling banking fraud, banking scam, which is different from default, right? So earlier, if we were to actually separate these things for our viewers' benefit, there's Vijay Mallya, there's 10,000 crore rupees on last count that he owes banks that he hasn't paid back, and that's default. And on the other hand, there's Nirav Modi with 11,400 crore rupees, which he actually fraudulently took. So he was generating, in simple language, generating sort of fraud invoices and slips here in India and using it to borrow money from banks overseas, saying, hey, I have a bank in India that's actually going to back up these loans. And when push came to shove, the bank in India actually had no idea that someone in their branch was giving him these slips. But 11,400 crore rupees is a lot of money to take, on something that seems this simple. So it's, the Nirav Modi scam was actually fraud. This was, this was a crime.
Absolutely. Yeah. If you want to look at it in degrees of varying level of carelessness or fraud or simply corporate failure, I think you would have to, since you mentioned Vijay Mallya, Dr. Vijay Mallya, you'd have to categorize him more as a case of a business that basically went belly up and some really bad decisions in terms of entering the aviation business when he did and continuing to fund it in the manner he did, and maybe taking his eye off the ball and really running bad strategies that caused the company to collapse. Of course, what then follows is, as we know in the last few years, a story where you have a situation with hundreds and thousands of employees not being paid, and air hostesses and flying crew and captains of airships who are essentially left without any salary or jobs. There's a morality issue over there in terms of like how are you supposed to behave with companies and with your employees. And then you have a situation with Nirav Modi, which is, I guess, a reflection of the evolution of corporate fraud in our country, as you want to call it. And to that extent, Nirav Modi wasn't running a legitimate multi-billion dollar diamond business, as much as he may have built the facade of it appearing to be so. There's no doubt in my mind that, of course, he built a terrific brand. He built a company which had products and jewelry with excellent design and very cutting edge themes to it. But if you actually looked at the structure of his company, which was mostly divided between diamond trading, wholesale, and the actual retail part of the business, which was his fancy designs and the luxury component, the sales in the last part, for which he was trying to take his company public, was actually the smallest percentage. And so you, as you mentioned earlier, these LOUs and letters of undertaking that he was getting from banks to fraudulently support and provide him capital in order to route funds across the world through a series of shell companies and essentially empty holding firms was nothing but one huge fraud.
Yeah, so several things that Nirav Modi did were objectionable, not the least of which was that ostrich jacket that he was photographed in, which was completely atrocious. But we'll set that aside. There's no law against that, unfortunately, yet. That jacket that I'm talking about. Coming back to the book on Yes Bank, well, yeah. But what I found interesting about this, and this is something I want to talk about, that it's, the problem in our banking system is how we lend, right? And there was various series of speculation about the fact that do we have an inability to actually assess whether someone can pay back or not? Is that the problem? Is the problem that our banks are lending thousands and thousands of crore rupees and then are unable to check on that money and make sure that it's being used for the right thing? Or are our banks, and now we know it's both public sector and private sector, are they just fundamentally corrupt? Are people taking, bribes and kickbacks to give loans to people who don't deserve it? Because that's what happened with Yes Bank.
I'd like to think I'm an eternal optimist, and I hope most of us are, and that we try and see the good in situations and in institutions and the people who lead them in our country. But I think there's a couple of things at play over here. I think to some extent, yes, lending and best practices in lending are a bit of an issue in this country, as have been evidenced in the last, you could say, decade or so. That's not to say that you haven't had malfeasance in lending not happen 30 years ago or 25 years ago. It was probably easier. I think the other factor that you have to take into consideration is that a large chunk of our PSU banks, and that's really the category of banks that is responsible for the larger volume of NPAs. I think it's close to 580,000 crores of late, which is almost 3 times what it is for private banks. And so if you look at why that's happening, there's a couple of different things going on. One is, clearly their checks and controls and their systems and their technologies are, for the most part, more outdated than that of private banks, right? I mean, you just have to step into any PSU bank, anyone, just pick anyone. And there's a marked difference between the systems and the processes that you see over there versus a private bank. That obviously makes things easier to game, one would imagine, and rightly so, as has been proved, right? The other thing is that when you have growing businesses that are very capital hungry and that are requiring large amounts of finance to expand, you need to have a very, very strong set of lenders working in tandem in terms of how they basically structure the way they give corporate finance. And what we've seen happen in the last few years is when you have a bust up, like say, for example, with PNB and Nirav Modi, you're having a situation where suddenly everybody clamps down and then they just don't lend at all.
Yeah.
And that's what we noticed with the entire diamond bourses and the entire diamond industry after Nirav Modi basically bust PNB. They were not getting money at all. And this is a real industry. The gems and jewelry industry is a very large part of India's exports. It's a very large part of creating employment within this country. And not funding it is not the answer. So I think it comes back to essentially resetting the systems, creating stronger regulation, and maybe looking at our technology much more closely in terms of what is affecting the PSU piece for starters.
We have a question from Gagan who says, how will privatization of government banks, will privatization of government banks be useful? We know that the government has now said that it's going to disinvest a little more within its banks. Will that bring in better governance? Because you said that the private sector does have, to some extent, access to better technology.
Yeah, I'd like to think so. To answer that, it's very hard to say unless you know exactly who's getting control of which bank that is being privatized. But if we just take for example, HDFC, which is arguably the largest private bank in the country and perhaps one of the best managed ones. And if they were to perhaps see a smaller sick or ailing PSU bank subsumed under them, one could estimate that they might be able to run it better than maybe another PSU bank that is plagued with problems and has its large share of NPAs. But again, the proof of this is essentially in the pudding. And when these things happen, one can take a call. But I don't think it's a battle of private versus public. I don't think you could really make the argument that private banks are always better run and PSU banks are always badly run. If you look at Bank of Baroda, for example, that's been a fairly well-run bank. I mean, they've integrated with other banks in the last couple of years. They have a really large book, and they haven't had any issues or no major issues in recent times. So there are examples of well-run enterprises in both sides of the public and private banking franchise, as well as badly run examples in both sides.
So I'm just looking at data that came out in June last year, which basically said that over 50,000 bank frauds were reported in in the last 11 fiscal years. ICICI Bank, State Bank of India, and HDFC reported the highest number of cases. That's obviously also in proportion to their size, because these are the three biggest guys, in that market. So it also suggests that maybe private or PSU doesn't really have much of a bearing, because it seems to be evenly divided between the two sectors.
SBI and HDFC and ICICI are all large players, but I think you also have to take into account the kind of frauds. Something like a credit card phishing activity, which is maybe being perhaps perpetrated by a truant employee in some call center office somewhere in Bangalore who's actually working for a bank, is also classified as something along those lines, versus something that then like Yes Bank or a Nirav Modi or a large DHFL or Cox and Kings sort of exercise, which is far more serious and hits the system much harder.
So actually not the bank frauds in numbers, but the actual ticket size in rupees we'd have to look at. There's a question from Zishan Sheikh. This is an interesting one. I'm not sure if it's a fair question to ask you. It says, most people think right now that INFS may file bankruptcy soon, and the situation might lead to, combining it with this previous question, a financial domino effect. Just putting it out there that I'm reading a question from one of our viewers. Is that, this has been a problem for a while. It's been a couple of years, but is that a possibility? Or if it does happen, will it lead to a domino effect?
Well, it's already led to a domino effect. If you look at ILNFS and some of its lending practices and, what happened a couple of years ago, it did have an effect. They felt like, bad wickets on a rainy pitch, right? You had Cox and Kings and DHFL and one after the other. So that's already happened. I think the way to look at it is that I think the cleanup is underway. And ILNFS was always a complicated structure. It was a quasi-government structure, which was made up of infra and made up of private equity, and then behaved in an NBFC fashion. So going ahead, it's a matter of how fast they can clean it up. I don't think there's any further damage that we can expect in terms of what has already happened, right? So, yeah.
Also, now that we boil it down to this thing. Camco asks us, is the RBI accountable? As auditing should be done regularly by RBI of all banks. You are right, that is true. RBI should be auditing, but it does seem like a lot of things are slipping through the cracks. Is it fair to hold the RBI accountable? Because there are two things. One is actually framing regulations. And we've had, the banking sector complain that our banking sector is the most over-regulated banking sector. So cops and robbers, really. But on the other hand, actually enforcing those regulations. Is the RBI slack? Have they been missing too many things?
The RBI has actually done a reasonably decent job in the last 3 or 4 years. If you look at how the asset quality review went about, and under Governor Raghuram Rajan, some of the measures that were introduced, which actually forced a lot of banks to sit up and take stock of what is really going wrong, which is also what led to, I think, a number of banks, being exposed to what we have seen happen. But I think the broader point over here is not whether you want to hold one regulator responsible, but really about, how do we lend as an institution? And this is something that I think has been debated and discussed earlier. You can have a central bank or a set of regulators lay down laws and rules. Eventually, rules and laws can always be broken. And that works just as well in India, an emerging market like us, as well as it does in more sophisticated advanced markets like in the United States, where you also have banking frauds and you have malfeasance. So it really comes down to, how is the loan officer officiating, how is the corporate entity or the private individual taking the loan and then using those loans, and then how does that whole system fall into place on an ongoing basis. Whether, you were talking earlier on about how you make your payments if you're a retail investor or a retail borrower for your home, and you essentially make payments on a regular basis. And if you don't make a payment on your home or your car, you get aggressive and obnoxious phone calls. And one wonders, how is it that these large organizations manage to get away with obscene amounts of money, largely at taxpayer expense, right? So
yeah. The top 10 at 62,000 crore rupees on last count. I just love that number. It's fascinating. So fundamentally, and and I was thinking about this while we were preparing for this interview, that these large numbers, 11,400 crore rupees, 62,000 crore rupees, it's very difficult to imagine the quantum, the amount of money we're actually talking about here. And the manner in which it gets reported very often, and the language becomes inaccessible to a lot of people, it tends to feel like it's happening in a different sort of realm. It's not happening in the same world in which I get a call because my 20,000 rupee credit card payment is a day late. It doesn't feel like it's happening in that same environment. What happens to average citizens who are paying home loans, paying their credit cards on time? How does it hurt us if our banks are losing thousands of crores of rupees every year?
Well, it does, right? I mean, we may not think, some folks may argue, well, the banks are going to be okay. And if you look at Punjab National Bank, which has lost a couple of $1 billion to Nirav Modi and his uncle, allegedly, they're back in the black. I think few quarters ago, they were back in the black. So they made good on their losses within a couple of years. Now, the PNB, I forget what the exact numbers are, but they're very substantial and large bank, right, with solid reserves and so on and so forth, as are most of the large banks in this country. But the fact of the matter is, it creates inefficiencies in the system. And for a country that is needing efficiency and profitability at every turning quarter, even the smallest inefficiency and setback does have a knock-on effect. I mean, if you look around our country, and at one level, we have abject poverty. We've all seen, some pretty horrific images of, the lesser equipped amongst us as they crossed across from metros and went to their hometowns during the implementation of the lockdown. And there were some, extremely difficult and extenuating circumstances for most of the underprivileged in this nation. And you start to wonder, we don't have the resources as a country which should be able to take care of our citizens. And on that very principle, you have to consider how we are allowing larger establishments and some individuals to get away with these sorts of crimes, which involve these sorts of large numbers of capital, right?
There's another question that's come in here, and it's a good question. basically the question of the bad bank. Ashutosh Sinha says, will the creation of a bad bank solve most of the problems with the NPA? Just to give our audience sort of a background. So basically what happens is an NPA is a non-performing asset. Someone's taken a loan, they're not going to pay it back. So if the bank is now holding this loan that is not going to come back, neither is it generating any interest. So it's useless. And the bank needs to figure out what to do with this non-performing asset. And the bank is required by regulation to set aside a certain amount of its own money as provision in case this loan never comes back. So there's money, there's capital of the bank that's being set aside now that's also becoming useless because that money can't be used. And effectively, a bank's business is to use the money. So the government in the budget, in the recent budget, announced that it will create a bad bank. Pavan, would you be kind enough to explain to us what a bad bank is?
Sure. Absolutely. So a bad bank is essentially an institution that is created outside of the regular banks. And basically what they do is they saddle the bad bank with all the NPAs and all the bad loans and accounts so that the existing banks can go ahead and function faster and get into recovery mode much more easily, while the bad bank, so-called, takes care of these bad loans and tries to essentially rationalize them over a period of time, and does that in an organized manner, in a more protracted manner, but one would hope in a more efficient manner as well. Now, how this would work, of course, these are all things that are being tried now in recent times for the first time, so it remains to be seen. But I think in principle, it's a good idea. It would certainly eliminate the constant rounds of discussion between syndicates of lenders as to how we're going to partition this asset and that asset. And we've seen some of that happen with the the insolvency and bankruptcy code in the last few quarters as well. It wasn't very easy to get your arms around because you had so many differing points of view when you looked at a company that was essentially being pushed into an asset reconstruction sort of a situation. So in principle, I think the philosophy of this is something that is, at least what I hear as well as understand from corporate circles, something that is being welcomed. Like most things in this country, a lot will depend on its execution.
So effectively, all of these banks in a game of pass the parcel have designated one loser in the beginning who is going to have to hold everything when the music stops. And that person now is going to... So you're freeing up the other banks to carry on with their business. And there's this one bank that will be created to sit and figure out how to recover the money from these bad loans. That's what's going to happen. Right. There's another question that's interesting here. Also, Siddharth Sriram, thank you for the $400. It's going to help us pay salaries and continue working as independent journalists. That's something we appreciate. There's another question about the Sensex. I seem to have lost it for a second. Why is this? Somebody asked, why is the Sensex, doing so well at a time when it seems like all of the news around it is bad. If only we knew the answer to that question. All right, Pavan.
Well, I mean, I'm not a stock market expert, but my assumption is that there's a lot of liquidity in the system, not just in India, but across the world. I mean, you have the almighty Fed who's been printing billions of dollars and is probably still going to be printing even more billions of dollars. And those massive buckets of capital cascade and wash across to our shores as well. You have a number of foreign investors also pumping money into our company, into our variety of industries, et cetera, et cetera. So that sort of does give a sense of confidence, in coupled with the fact that people are playing the stock market at the retail level, they're investing in those areas. So yeah.
Actually, the scary thing about Yes Bank was, while it was no depositor's fault, a retail depositor's fault, what happened in that bank, basically it was being run badly. The people at the top were handing out loans to those who didn't deserve those loans. And they were doing it allegedly because they received bribes and kickbacks. So, you give me 1 crore rupees and I will give you a loan for 100 crores that you don't really deserve. But what happened at the end was there was a run on the bank. Depositors didn't have access to their own money. Small, depositors who had 10,000, 15,000, 1 lakh rupees in the bank didn't have access to their money. And that's really scary. And we've seen it happen a couple of times. Is there a risk of this happening to any other bank? Are the rest of them now secure? How would we ever know? As someone who's got a couple of thousand rupees in the bank, how do I know that that bank is safe and the same thing is not going to happen to my money?
Well, you could study their books and you get a strong sense of how the balance sheets are looking. And if you start tracking their NPAs and drilling down, you probably get to a fairly accurate assumption of whether they're going to get to that point or not. But most banks have not been run like Yes Bank has been to those very outer limits of pushing uh, the envelope, so to speak, in terms of giving loans. I mean, Yes Bank was known, Yes Bank and its promoter Rana Kapoor was known to have actually approached companies that didn't even need capital and said, "Look, why don't you take the money? I'm just going to give it to you." I mean, this is something that was well talked about in corporate circles, and the idea was that a lot of promoters actually rejected taking loans from Yes Bank, allegedly, because they knew that if they made one slip in the business, there would be a lot of clawback clauses and a lot of penalties that came along with that would eventually lead them to lose what Yes Bank's promoters seem to have liked the most: real estate.
So tell me this. Of course, I mean, I remember a time as a journalist when Rana Kapoor of Yes Bank was being given award after award from business channels and business newspapers for being Businessman of the Year, because he managed effectively, on the simple yardstick, that he managed to grow his book, his loan book, out of nothing. So this is what he was doing. He was handing out loans to people who didn't deserve it, and it made him look really good. But is there a lack of, I mean, integrity is a very big word, but are we not being vigilant enough of businesses in India? Are we not asking enough questions? Is there not enough investigation going on from both agencies of government who should be investigating and from journalists who should be investigating? Where's the gap there?
I think there's no question that more scrutiny is definitely needed. I think one of the things I learned while I was researching Rana Kapoor and Yes Bank, especially early on, is that he actually was very aggressive about growing the bank. He wanted to be as big as HDFC. He actually kept a copy of HDFC's annual report in his car, near his bedside table, and on his office desk, in three places, because he wanted to study how it was behaving and performing. And he consistently wanted to grow. It was 50% today and 100% tomorrow and 150% the next month. And that's not different from most entrepreneurs or business people who want to expand their enterprises. But I think the rate at which he was doing it and at what cost turned out to be the problem, right? I mean, he was not doing the diligence when it came to the quality of companies, the kinds of loans, the businesses, the industries. And people said the urban legend about Rana Kapoor and Yes Bank was supposedly that he knew how to get his money back. Well, I think looking back in hindsight, the answer was that that was simply just an urban legend. It wasn't true, because he couldn't get the money back after a certain point.
All right, Pavan, we've run out of the assigned time I had put down. There's one last question I'll just slip in if you want to take it. Gagan asks, will we have an Amazon, a Reliance, a Microsoft bank anytime soon? But we do know that the government is now opening the banking sector up to the private sector, the corporate sector. There have been some worries. People don't think this is a good idea. But do you think that's a possibility, that big corporates will now have their own banks?
It's quite likely that big corporates will get involved in the financial and banking system. And this is not necessarily a bad thing, right? I think the key is that if you have separate management systems, if you have a different board and if you have a different CEO, and if the businesses are run as separate entities, it's fair game. I mean, it's just like operating a brand new bank. I mean, at the end of the day, today, within, as you know this as well as I do, within our business system, the level of cross integration and how everybody is connected in terms of industry is not very spread out or far apart in any case. So to say,
you're politely saying that there is a small group of businessmen who control almost everything.
Well, that's pretty much the story worldwide or in this country or anywhere else. And I think, if you were to look at clearly cut management teams, and of course with the right direction, it could work.
I mean, effectively, we would be asking the question of, if Kotak can have a bank, why can't Reliance have a bank? And what is the problem there? But what is the problem? What are the concerns?
I don't know if there's a problem one way or the other, but I think it's a different kind of I think I don't know if that's necessarily an apples to apples comparison, because Kotak started out with banking and wealth management, whereas Reliance has necessarily started out with oil and gas and maybe branched into retail and now maybe getting into banking, or at least digital banking vis-a-vis Facebook or geo payments or whatever. I don't know what the future holds for them, but it would be a different sort of industry. And I mean, look, here's the thing. I mean, at the end of the day, it's a free country. Anybody can do what they want. People can get into media, they can get into banking. My point is, the regulations and the laws and the rules should apply to everybody. And I think people especially our lawmakers should endeavor to make sure that the average guy on the street doesn't get left holding, the can every single time.
All right, Pavan, thank you so much for spending time with us and answering those questions. It boils down to regulation, and not just the regulation, but who's watching, really, who's keeping tabs and who's blowing that whistle. In a lot of cases in banking fraud in our country, at least when the fraud was really large, the whistle was only blown after the person in question had left the country. And perhaps that's a problem as well. But thanks so much for this conversation. Good luck with the books. And I hope you're writing something very soon, because I look forward to whatever comes off your computer next.
Thank you. Good evening and have a great time.
All right, for our viewers, remember, check out a couple of the videos that we've put up. We put up an explainer of the toolkit case. We've also put out our news bulletin for today. Go check it out. No noise, just the news. 10 minutes and you'll find out what's going on in the country. And share our videos with people you think would find this information useful. Thanks for watching. Good night.